You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
Welcome. If you're listening, you want to get past the headlines, and today we're definitely doing that.
We are. We're looking at something pretty big in global finance right now.
Yeah, these really noticeable shifts in Asian currencies against the US dollar. Quite strong movements.
That's right. And we're drawing on some recent analysis that points out just how unusual some of these shifts are.
Exactly. So our mission here, in this deep dive is to figure out why. Why are these currencies gaining so much? What's behind it all?
And what are the potential knock-on effects? We'll get into some surprising stuff like record central bank actions.
And maybe even a rethink in how big players manage their money globally. So yeah, let's jump in.
Okay, so the main takeaway, the headline from the analysis, is this clear strengthening of several Asian currencies.
And it's happening pretty much while the US dollar is weakening. They seem linked.
Very much so. And the sources stress this isn't just normal market noise.
Right, they use phrases like rarely seen superlatives. That suggests something more fundamental is going on, doesn't it?
It does. And this dollar dip, it seems tied to worries about the U.S. economy, maybe a potential slowdown.
The analysis specifically mentions President Trump's tariff policies, how they keep shifting as adding to that worry.
That makes sense. Trade uncertainty, it tends to make markets jittery, affects how people see the dollar's stability.
And it looks like that sentiment is really shifting. What about speculative traders?
Yeah, that's a key point. The report says they're showing a bearishness towards the dollar, the most since last September.
So people are betting against the dollar more than they have in months. That's significant.
It suggests a real growing reluctance maybe to hold dollar assets right now.
Okay, so dollar under pressure. And at the same time, boom, Asian currencies are surging. Let's get specific. Hong Kong dollar.
Right. What's really striking there is the Hong Kong Monetary Authority, the HKMA. They had to step in big time.
How big?
Sold a record amount of Hong Kong dollars, just trying to stop it appreciating too much, too fast against the U.S. dollar.
Wow, a record amount. And that's to defend its peg to the U.S. dollar, right? That peg's been around for
42 years.
42 years. That really highlights how strong the pressure must be. Okay, what about the Taiwan dollar? That moved fast too, I gather.
Oh, incredibly fast. It had its biggest single-day gain since, wait for it, 1988.
Since 1988, goodness. How much was that?
A jump of 3% in one day, which, also triggered intervention from their central bank.
Right. And the offshore yuan wasn't left out either.
No, it rallied strongly too, hitting its best level since November.
So you see this pattern. Strong Asian currency, central bank steps in. Why exactly are they intervening? Just to slow things down?
Primarily, yes. It's about curbing those excessive gains. A stronger currency sounds good, but if it happens too quickly...
It hurts exports.
Exactly. Makes their goods more expensive overseas, hits competitiveness, so they try to manage the pace.
Okay, so dollar weakness is a big part of this. But are there other things pushing these Asian currencies up? The report mentioned a couple of ideas.
One is this thing called repatriation buying.
Repatriation buying, what's that exactly?
It's basically investors, maybe companies too, bringing money back into their home Asian countries.
Selling foreign assets, maybe dollars, and buying their local currency.
Precisely. That boosts demand for the local currency. Could be driven by better growth prospects at home or interest rate changes, things like that.
Interesting. And then there's this other idea that Asian currencies are becoming... what was it? Alternative investments?
Yeah, almost like a sell America kind of wave, or at least diversify away from it.
That feels like a pretty big shift in thinking. Why would investors see them that way now?
Well, it could be a mix of things. Doubts about the U.S. economy, like we said, maybe seeing more potential in Asia.
Or even sort of a longer-term view on where global economic strength is heading?
Possibly. And what's interesting is the analysis suggests this trend was holding up even when there were signs trade tensions might ease up a bit.
Right, the trade tensions, always lurking. There was that quote from Brad Bechtel at Jefferies. Something about the dollar deflating.
Yeah, he said the natural way out of a lot of this trade tension is via the dollar balloon deflating.
What's the thinking there? A weaker dollar helps ease trade friction. How?
Well, the idea is if the dollar is weaker, U.S. imports cost more, and U.S. exports become cheaper for others to buy.
Ah, so it could potentially help reduce those big trade imbalances over time just through currency moves.
That's the theory, a kind of market adjustment mechanism.
And the markets are definitely reacting. Wild swings, the report called it.
Absolutely. There's a Bloomberg gauge of Asian FX volatility. It saw its biggest jump since 2022.
And I saw something about an emerging market FX return indicator hitting an all-time high.
That's right, an all-time high. It just underlines how significant these moves are right now.
We touched on this, but let's be clear. Stronger Asian currencies, good for some, bad for others.
Definitely a mixed bag. The upside. Imports get cheaper, which can be good for consumers and businesses buying foreign goods.
And it can attract foreign investment, right? Make assets look more valuable in dollar terms.
Correct. But the big downside, as we said, is for exporters. Their products become more expensive on the world stage. Less competitive.
Okay, let's circle back to the Taiwan dollar for a second. That 3% jump was huge. What was the specific trigger there?
It really seems to have been this flood of foreign money into the Taiwanese stock market.
Why the sudden rush?
Big expectations for Taiwan's semiconductor industry, betting on continued strong demand from the U.S. for those chips.
Ah, the tech connection? Makes sense. Anything else?
Yeah, also local exporters. They were selling the dollars they'd earned and converting back into Taiwan dollars, adding fuel to the fire.
So foreign investors and domestic companies both pushing it up. No wonder the central bank stepped in.
Yep, they put out a statement saying they'd entered the market at appropriate time, trying to smooth things out.
And the options market, people betting on its future direction.
Very bullish. Sentiment towards the Taiwan dollar hit levels not seen since, before the 2008 crisis.
Wow. That's serious confidence.
It really is. Suggests traders think this strength has legs.
Now, it seems this move away from the dollar isn't just investors. Chinese exporters are changing their tune, too.
That's another really interesting finding. A Bloomberg survey showed they're less inclined to just hold dollars or U.S. treasuries as a safe haven, especially with trade tensions.
So what are they preferring?
Increasingly, holding their earnings in yuan. It's a shift in how they manage their currency risk.
What are the big banks saying? Goldman Sachs, for instance.
Their analysts are basically saying the calculation has changed for Asian exporters holding dollars.
How so?
Well, with the dollar under pressure and the possibility of U.S. interest rates being cut, the risk versus reward of holding dollars looks different now.
So they expect certain currencies to keep gaining.
They do. They specifically mentioned the yuan, the Taiwan dollar, and the Malaysian ringgit as likely to appreciate further.
Okay, so it's exporters changing behavior, and it's also just broader investor reallocation driving this.
Yes, definitely. Investors moving money out of dollar assets adds another layer of upward pressure on these Asian currencies.
And we saw that play out last month, right? Dollar, treasuries, U.S. stocks all slumping together.
Exactly. A lot of that was tied to those Carifories concerns about inflation, the economy, what the Fed might do.
It really feels like a perfect storm of factors. And then, just to complicate things, hope springs eternal for U.S.-China trade talks.
Right. The buying of Asian currencies reportedly picked up steam on Friday.
Why Friday specifically?
China's Commerce Ministry mentioned that U.S. officials had apparently repeatedly expressed willingness to talk about the tariffs.
Ah, so even a hint of better relations gives these currencies another boost.
It seems so. Adds another reason for optimism, however tentative.
Okay, last piece then. What's Wall Street's general view on the dollar going forward? Are these concerns likely to stick around?
The consensus seems to be yes, even with some decent U.S. economic data, like that strong jobs report.
People aren't convinced by one good report.
Goldman Sachs, for example, suggested that one report doesn't necessarily change the bigger picture or future trends. The underlying concerns remain.
And Morgan Stanley, I heard they were pretty down on the dollar.
They are. They're maintaining a bearish outlook. They link it to the U.S. yield curve shape, which can be a recession indicator for some, and also just investors continuing to hedge their U.S. investments, protecting themselves against dollar falls.
Are they bullish on anything else instead?
Interestingly, yes. They mentioned being positive on the euro and the Japanese yen. So a clear preference shift away from the dollar.
Right. So let's try and wrap this up. We're seeing this really potent mix, aren't we?
Absolutely. You've got dollar weakness, you've got trade tensions simmering, maybe easing slightly, maybe not, and you have investors and exporters fundamentally changing how they act.
And all that is forcing these big moves in Asian currencies, leading central banks to jump in.
And these stronger currencies, they bring benefits like cheaper imports and attracting capital.
But they also pose real challenges, especially for export-driven economies losing competitiveness.
It's a complex balancing act for policymakers.
It really is. Which leaves you wondering, doesn't it? If currency values are shifting this dramatically on a global scale, what else starts to change?
Good question. What other parts of the interconnected global economy might feel significant ripple effects from this in the coming months or years?
Yeah, it's not just numbers on a screen. It affects trade flows, investment decisions, maybe even geopolitical balances down the line. Definitely something worth keeping an eye on.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.